Hello traders, Gary Wagner here, approximately 10:40 in Honolulu, 4:40 in New York on Tuesday, 14th day of July 2015, and this is Trending Markets. We have seen two critical negotiations that have been taking place for quite some time actually come to a conclusion this week. Of course, at the beginning of the week and on Sunday, we had austerity measures that were agreed upon by the Greek government and the European Union. Of course, details are still needed to be worked out. And then, of course, an agreement between Iran and the United States. That's why we're looking at oil. Oil actually trading up almost 2% on the day. You would have thought that we would have possibly seen some sort of weakness come into the market once that deal was negotiated. However, many analysts believe that that was kind of factored or baked into current price. We've seen this market under pressure, one. Secondly, if this agreement does actually unfold in the way that they're speaking about it now, you're not looking at any Iranian oil really hitting the market till about 2016. So you've got to factor that in also. So we do have oil. It is trading higher on the day, as I said, up about 2%. And that's really the first rise that we have seen in this market over the last period of about a week. Of course, when we look at it from a very, very short-term perspective, and let's go ahead and pull this chart up now. This is simply a 2-hour chart. 120 minutes, standard candlestick format. What we do see in terms of a technical area, I was looking at this bottom right in here, right at around $51 per barrel. And that's the particular level that it seems at this point to have held. Ever since we hit this point, we've hit it once here, just below it here, and then our third time finding support, taking the market up to around $53, just above there. Now, when we consider the fact that we have a couple of different areas, one, this particular top has just been taken out, and that top is roughly at about 53. But the real level in terms of a technical basis where I'm looking for some sort of resistance to come into play has to be $54 per barrel. And I genuinely believe that that is the point. This top up here at $54 is where we'll probably initiate shorts if, in fact, we see this market come up, test this area, and find some weakness. To look at any other areas in terms of support and resistance, we really need to move out to our longer standing chart. And when we do that, and I've gone ahead and pulled up a daily chart, there's a couple of interesting technical features that we absolutely need to look at. Now, on this daily chart, you can see a price void or gap right in here at around, call it $56 per barrel. Market currently at 53. Also, when we look at our current Elliott wave projection, it is looking for this market to possibly move as high as 58 to maybe 59 on this counter trend, this wave 4 up. That being said, and that's why we need to look at these outer charts, especially our daily. That being said, what we really want to see is, let's assume if the market in fact trades and finds resistance, that's this top right in here, and begins to come down, we know what our action is. However, if the market barrels through that level, then what we'll probably see is this market come in, fill this gap at around 56, and then move back lower. Typically, when you have gaps in the market on a technical basis, you do look for them to get filled. So in terms of putting a position on in crude oil, we want to see how it reacts. If it continues to move higher, how it reacts at 54, if it finds resistance and moves back down, if it barrels through, how it reacts at $56 per barrel. So when we look at the currencies, we see that they're rather quiet today. They've been quite active at the beginning of the week. Of course, we have Yellen coming in and speaking a semi-annual talk on Wednesday, and so they're going to wait to see what happens there. Of course, any hint or move closer towards a rate hike initiation in September, of course, is going to be bullish for the dollar, bearish for the precious metals, but we could see the dollar clip up nicely if in fact that happens. Currently, as I said, 56.65. Euro, on the other hand, that's moving up, but again, very, very nominal move, basically unchanged on the day at 110.71. And really, the quietness that we're seeing in many of the markets is really overshadowed by the fact that we've gotten extremely, extremely bullish equities markets, not only here in the United States, but globally. These markets have been expanding. They have been moving to higher ground, back over 18,000, 18,053, up 75 points in the Dow Jones Industrial Average. And when we look at the S&P, this, of course, being the E-mini, back above 2100 at 2102. Now, a lot of traders have been talking about this 200-day moving average. And let's go ahead and drop that in. And as you can see, I've put in a simple moving average, and of course that moving average is a 200-day. And the thought behind this particular very, very long-term average is showing you whether or not, of course, this market is able to maintain above this 200-day moving average. That's a real bullish sign. Now, we've gone in and tested that area on a couple of occasions. On those occasions, really bouncing off that point, you can absolutely see that we went into the territory, but it genuinely looks as though we found some support in the market. This, of course, being our daily chart right now, and we've had these substantial moves to the upside when we look at it through the eyes of a Japanese average chart. However, when we convert to a standard candlestick chart, and the basic difference is this is showing us true opens and closes in the market. You can see that after two very, very strong plus 200-point days, both on Friday here in the United States as well as yesterday on Monday, these terrific moves, the fact that we're seeing the market move back up and move back to that record territory, to me is a very, very strong statement, especially when we had some retail numbers that came out that were a little bit soft. Now, record tops right above 2125. And the key is that we've seen this market really make plays near these tops only to bounce off. However, on each occasion that came in corrected, you've got a higher high here, a higher high here, a higher high here. Now, this high here is not a higher high, it's rather a lower high. So it's going to be really interesting to see if we take this particular price point out, because that on a technical basis is really showing some real support entering the market. Now, really to give you a better idea of this moving average, what I've done is converted our chart into a weekly chart, and we've changed our cycles in terms of the moving average cycle to 54 to represent 50 weeks in the market. And you can really see how this market, you've got your correction right here. This, of course, was a pretty sizable correction, but then the market recoups, comes up to around 1400, tests this 200 successfully, moves off of it, tests it, move off of it, tests it, move off of it. We had this test, so we've had 1, 2, 3, 4. This is our fifth test of that 200-day moving average. And when you look back, this is a long-term study going back to 2012, 2011. So we've seen the dynamics of this market as it's gone and made new high after new high. And as I say, you've got to be impressed with the fact that this market literally bounced off of that. Now, the one thing about making a play into Standard & Poor's is that I really believe that overall we're going to have a continuation of this upside trend, especially if we're seeing it continually trading above this 200-day moving average. But being so very close to the top, I'm a much more comfortable long player if and when we take out these highs and this becomes our support, meaning 2125 becomes support rather than resistance. That's when we want to enter it from the long side. However, if we see this market either break below the 200-day moving average or move up to these record tops and find weakness, then we're looking at In the case of going to these record tops and coming down, we're looking at a short-term short play in the market because we'll look to see if it finds genuine support back again at the 200-day moving average. However, if by some chance or when this market breaks through this point, traders, that's when we'll see a dynamic short play in the market. So for right now, we are going to be flat with no active positions in the currencies or oil. We've set our parameters as to what we're looking for. I'm looking to get back long dollars. I'm looking to get short oil. The Standard & Poor's, as I said, those are the parameters we have to see met before taking on an active position. This has been Gary Wagner wishing you, as always, good trading. Talk to you tomorrow for another Daily Update review. Bye-bye.